One of my favorite business programs is called Dragon's Den. It's basically the UK version of the American version called Shark Tank. So basically, for those who haven't seen it, a bunch of investors actually go into the den. They try to actually get some investment from the so-called dragons or investors. Now, what does this business show about investing, and what does it show also about business? Now, number one, it shows that it isn't easy to compound a large amount of money. What do I mean by that? If you've only got $100, I wouldn't say it's easy to compound that 10 times. But let's face it, with a small amount of money, you could just go out and buy 10 books or even 50 books and just use those books and then use the knowledge from those books to make money. Or you could do something like buy old domain names and make money. When it comes to small amounts of money, I wouldn't say it's ever easy to make huge amounts of money, but of course it's much easier. Then when you got to slightly bigger amounts of money, say $100,000, it gets harder. But once you've got like tens of millions or like hundreds of millions of dollars, of course it gets harder to actually compound that over time. Getting 8% return on say $50 million is of course a lot more difficult than getting 10% return on $50,000, right? So the first thing it shows is if you've got a hell of a lot of money like a lot of the dragons do, you've actually got to often invest in smaller businesses to even have a chance of competing with passive investments. Because if you invest in loads and loads and loads of small businesses, they might actually be risky, but you've got a chance of really making it big on one or two of them and making some money on some of the rest. So if you invest in 100 companies, but only 2 make it big and 5 do relatively well, you could still be making good profits from that. That doesn't mean they usually lose money on the deals, but you get my point. And kind of a link to that, though, I would say, is a lot of people out there think it's easier than you would expect to actually make money on a consistent basis. So you see a lot of people come into the den. Sometimes they come in with complete delusions. And I think the biggest reason for that is a lot of people think their idea counts in business, when in reality, what's important on the show, people are asked, well, what's your revenue? What's your projected revenue? What are your sales? What are your net profits, gross profits, and things like that? That's what counts in business. Not a good idea, not great services. Not great products. Those things can help if you know how to monetize them, if you know how to brand them, market them, sell them, or whatever. You know how to keep your costs down. But what matters in business are the boring things like cash flow, like sales, like keeping your costs down, right? And also linked to that, I think, is a lot of people are confused about valuations. Like I remember a management consultant came into the Dragon Shop, these crazy valuations, and a lot of people think things like, oh, well, the size of the market is so big, so in so many years, my business will be worth X and Y amount. But it doesn't work like that, because a business isn't a liquid investment. It's a bit like saying, oh, you know what, my business has made X and Y profits this year, X and Y revenue. So most businesses grow by 10% per year, so my business could be worth so much in 2030. It doesn't work like that, right? Valuations are a very complicated thing. And from the point of view of an investor into an illiquid business, there's also got to be some kind of, you could say, conservative buffer. Because with small businesses, it's not like investing in stocks where you can just press the sell button or the buy button. It's that, there's a lot of due diligence, there's a lot of work. You have to be a bit conservative with who you invest in. And also, finally, I would say the time commitment. If you've ever watched the show, I think it's called After the Den or something like that, it shows how much time people have to put into businesses. So a lot of people think, why make investments if you can so-called only, you could put down inverted commas, only make 8 or 10% per year. But at the end of the day, when it comes to a business, it's much more high risk, high reward. It requires your physical health to remain. It requires a hell of a lot of work. Sure, eventually you might be able to outsource everything. You might be able to be on autopilot. You might be able to keep adapting to the times. But running a business and an investment are 2 different things. Okay, everyone, have a good day.